Hello guys and welcome to our YouTube video.
In this video, Ryan's going to run through CADCHF and I'm going to run through NZDJPY.
So let's get into it. CADCHF starting on the monthly chart. Just looking back in history, we have been making these impulses, correction, and another impulse to the downside. Looking at these three monthly candles, this was just the pullback. We did end as a doji, and now this monthly candle, as is the last week of the monthly candle, is looking to end bearish as engulfing. So this is an evening star formation candlestick, and it's significant around this area, which when I draw in the technicals, you'll be able to see why. So technicals drawn in, you can start plotting these levels in the market. We had our key monthly level up here, 0.785, where as you can see, price touched it here, impulse away, touched it again, and then when we touch it here, we form this corrective pattern, which is a bearish pennant. You can see this failed to touch this, but it's still, you can still count it as a touch. 3, 4, 5, and then on this one we did impulse a break in this structure, and then this monthly candle we whipped this level in the market here, which is D, which is a significant level. As you can see, it's the touch of the pennant. So zooming in on the lower time frames, you'll be able to see this a lot clearer. Weekly chart, still not just another detailed version of the monthly. Yeah, just showing you exactly what's going on in the market, a lot more clearer. We did have this weekly downtrend, which I've drawn in. As you see, we did form this evening star of it, came back, retest, and now we're retesting it again. So this is our third touch, so we should be looking for another continuation to the downside. Another thing to highlight here, how bearish this weekly candle is. Big wicks to the upside, rejecting it, and then closing bearish. So this is something to look at. On the daily chart now, I can start drawing in some more technicals basically start drawing more technicals. So we had this uptrend, which was broken, which is fantastic, with a big bearish candle. And ever since then, we have been correcting across this area across here. So if I draw in some more technicals, we did have this channel across here and across here, which just broke, which is looking a bit like a channel or bearish flag, whatever you want to call it. It's just an impulse correction, and now recently we have broken out of it. We also have a level in a market across here where we had a touch on the trend line, and we touched it here. As you see, we touched it and then had a big bullish push to the upside. But as you can see, this was just forming a corrective structure to come down. Another thing to highlight on the daily, we do look like we're forming this head and shoulders pattern with the shoulder, head, and the right shoulder. And I can see this is the neckline now. So now we're painting a picture looking a lot nicer. So what we need to enter, so we had our confluence in, so we have the head and shoulders, we have the break of the uptrend, higher time frames, we had that evening star. So now jumping on the daily time frame, now we can start thinking, okay, how do we need to enter and where do we need to enter? So in order to enter, we will need a pullback to around this area in the market, as this is significant. As we recently seen, we've broken this flag channel and this support level in the market. Great. So once we get the pullback on the smaller time frames, we can then take shorts. A level in the market across here, which should be key to target first. As you can see previously in history, we've had a double bottom form here of this trend of this uptrend. So that's a good first target. So once we do get that pullback, let me get my short position, get a pullback to around here. We either retest this trend line or retest this support level in the market. Either or, it's just this area in the market we need to look at. So say, for example, it's here. We should get some wick rejections, put our stop loss just above the wicks, and then we can target here looking at a 1 to 4. So that's your short-term target if we do get that pullback. Long-term, we can look to trade the night array. So that's our first target. If we do break below this, we can retest this level in the market, and then we can take shorts down to night array, which is down here, which is also, it's almost a psychological level of 0.66. If I put it there, yeah, so it's 50 pips short. So yeah, around here of that psychological level, which would be a really nice target, and we can get nice rewards, especially if we can catch a short from here. See, It's looking really nice. Like you could probably catch a 126, 127, depending on the stop loss. Another thing we could do, as this is a impulse correction continuation, just looking at this impulse from there to there. If I can grab that, from the retest down, we can also maybe target this potential trend line down here as well, just following from the impulses correction impulse. That's how it normally works. We get impulse correction, and normally the impulse should normally match the continuation. So we could potentially target down to this trend line as well. So yeah, that's for the long-term future, but short-term, you can see we can pull back to this area in the market and then catch shells from there. So yeah, that's CADCHF broken down.
Okay, so this is NZDJPY. I'm going to show you my top-down analysis on this pair. So starting on the monthly chart, as you can see, we do have this psychological level in here at 60.0, where price has been using it as resistance over here, through here using it as support, and then most recently we have actually used it as support with a huge wick rejection of this level. We do also have a zone within this market, if I can show you, where price has been using the zone as support and resistance. It's quite a big zone, but it is key just to show the market structure on the higher time frames. Something like this, a big zone in the middle where price has been using it as support over here, making big impulses to the downside, then using it as resistance through here, another big impulse through it, using it as support around here, as you see all these wick rejections, and then finally recently we have actually broken to the downside, and we can start to predict that potentially we're going to use it as resistance and make a big move to the downside, potentially to retest 60.0 again, or even lows of down here at around 44. So if I delete this zone now, just looking at the market structure on the monthly chart, you can see that we are in bearish market structure. If I just draw a little trend line in to show you visually how we are making lower lows and lower highs in the market. And even looking at the candlestick patterns, how, yes, we are making bullish movement towards this trend line, but we are seeing a slowdown. We did have a wick rejection of this monthly candle in June, wick rejection to the upside, and this candle, this monthly candle with only 5 days to go, is looking like an indecision candle with a wick to the upside, just emphasizing the slowdown in momentum and the potential shift that we're going to get to the downside. So let's jump down to the weekly. Let's delete this trend line. So on the weekly, we have actually formed a double top. So if I draw this in here, and the way the candles have ended as well. So we did have these two indecision candles from the 6th of July and on the 13th of July, those 2 weeks, we did have two indecision candles. And then last week, where buyers had the potential to actually engulf this candle to the upside, they failed, and sellers actually drove the market down and closed back inside this indecision. So we know that buyers were unable to take control, and sellers picked up at this level to drive the market down again. So let's look now at the daily time frame. Well, on the daily time frame, you can see that we are in actual bullish market structure, making higher highs and higher lows, and using a zone as a significant level as support through here. So as you can see, we made our first higher high up here, followed by a lower low, which is actually in line with this level in the market. And then we made our higher high again, which actually formed our double top, and then we had an impulse away. And as you can see, from the candlestick here, this daily candlestick, the significance of this level here at around 70.0, because we did reject it with a wick. So we know that in order to actually start taking sell positions, we would like to see a break of this level across here. Dropping down now to the 4-hour time frame, so you can see this a lot more clearly. You can see the zones a lot more clearly, all the wick rejections in the middle. If I just delete some of this. Now, potentially we have had our impulse away. So if I was to draw an uptrend in across here, a vague uptrend, just to show how we are starting to break this bullish market structure, but it's not enough. Like we said, we need to see a break below this level, but what we can start to predict is potential head and shoulders pattern in the market. Because if I draw this level in here, around there, what we would have expected is when price impulse through here and then pulled back to retest this level, we would have expected price to make an impulse to the upside. But instead we did impulse through. So what we want to see now is is to start to see the market form bearish market structure, and that's in the form of a lower high. So we'd like to see the market is pulling back now, but if I just show you, we'd like to see the market pull back to make this initial lower low, and then make the next impulse to the downside, making a lower low. So sorry, this is the lower high that the market needs to form around here. And that's actually making the right shoulder of this head and shoulders pattern. If I was just to draw this in now, we've got the shoulder on this side, potentially making the right shoulder, and of course, the head up there. So, and obviously with a head and shoulders pattern, you're always looking for the break of the neckline, which is this key level here across 70.0. So once we get our initial lower high here, and then an impulse to follow that, once we get a break below here is when we can start to look for our selling opportunities. And that opportunity is going to be in the form of a retest of the neckline. So once we get a breakthrough, we're looking for a pullback to retest this neckline, where at this level, we will be looking for short positions down to here. And where we'll be targeting is this low at around this level. As you can see, we've had 2 rejections down there. So it's a good level to target. So yeah, we're looking for a sell position on the pullback here, with a potential trading setup looking something like this. Potential risk, yeah, risk reward around 3 to 4, making sure it's at least 1 to 3, so the risk is worth it. But yeah, that's NZDJPY, what we'll be looking for going into next week.